Good afternoon, traders. This is Christian from Tropic Trade Group, and this is your end of day market recap for Monday, February 24th. And another lackluster day in terms of the price action. I will review all that, but first things first, risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving any advice or recommendations. One thing I think to mention too, which I think is kind of like one of the things top of the list right now, is that we are still going through weak seasonality. That's not going to change this week, not until we basically get to March. It's something that I've been trying to talk quite a lot about in terms of this is something that Ryan Dietrich put out from Carson just the back end of the month. And, we went a couple days into the second half of February and things look like they were decent. But we've really seen a major correction in momentum names, some growth names. Other areas, for the overall indices, they're just kind of dipping a little bit, but some areas of the market could just continue to get shelled right now. So I'm going to review the price action with you. I'm going to let you draw your own conclusions. As always in these videos, that's what I try to do, is just give you a sense of like what's going on, both, in the major indices as well as what I'm seeing under the hood. And you can kind of get a sense of what's going on, and then of course I tell you, what I'm doing. Basically, when I came into today, I had a feeling that the little bounce that we saw in the overnight market, I didn't think it was going to hold. Why didn't I think it was going to hold? Because when you have such a nasty day as we had on Friday, where there's a lot of stocks were down 5-10%. I've been talking a lot about a couple of the momentum ETFs, like the IBD ETF, IBD 50 ETF, which was down, has been down about 12 or 13% in 5 days. 4 or 5 days. I think it's now down 15% after. I didn't see where it closed today, but probably I think at one point today it was down 15%. So when you have that type of price action and you get a little bit of a bounce, those people who are kind of holding on to some losers, they're like, oh geez, I got a little bit of bounce, I can get out on a little bit of an uptick, right? And that's why we kind of saw this swoosh down in the first hour of the day. However, and then we kind of saw dip buying, right, and a little bit of regrouping, but we ran out of steam there, right around like 2 o'clock. We began to kind of leak lower here, and this is just the cues and what happened for the day. But here's your bounce, and then just nasty. I mean, again, look at how fat, look at how much ground these 5-minute bars are covering. So to me, that's pretty volatile. It's pretty volatile stuff. When we look at the 1 hour, I'm going to just start with the cues. I usually start with the S&P, but we're not holding where we need to. So to me, this is a bit unusual to see. When we break out to new highs, and then all of a sudden you see this, these really forced selling that's going on, and on heavy volume too, which that's, by the way, when you do see heavy volume is on selling pressure. But this has now broken the 50-day moving average, and it's happening very quickly, and it's happening pretty harshly to the downside, with the Qs down another 1.2%. Now, this is just the Qs. I think there's worse things out there, and I'm going to go through a couple of those things with you. But here's where we are. We've broken into the value area for the month. That's going to trigger the bearish 80% roll. Keep in mind, which means that there's a 80% chance that we move from one side to the value area to the other. But keep in mind that we only have a few days left. SPY is probably closer to doing it. So if we look at the SPY chart today, here's what this looks like on the daily. You could see that the value area is pink because bearish 80% rule, right? And we've also broken the 50-day moving average with this. So that's another 1.3% down. At this point, that's not, considering how fast we've been moving, that's not that big of a distance. As the sellers are in control right now and really kind of taking it to this market. Again, very unusual to see us, like, just a few days ago, be at, new highs and completely, get rejected here after making a new high in SPY. One bright spot I would say was RSP, which was positive. At one point it was up, I think around the highs of the day, it was up 0.4 of a percentage point. But this isn't a very convincing looking chart either. Like, it's a pretty sideways looking chart. IWM we know has been an absolute mess. That continues to break lower. Again, it did not take out the lows of the day, but that's as low as where we've been since the beginning of the year. That big gray box is the value area for the year. So we've broken into this. Now, if this weekly closes into the value area for the uh, at the end of the week, it will be a first close or second close into the value area for the year, and that will trigger the bearish 80% rule, looking for a move all the way to the downside. Right, so that's what we've got going on. Just to look at a couple of the other, I mentioned I would kind of bring again, this is another example. Equally weighted Qs made a new high towards the end of last week, absolutely rejected. Here's where the pain gets worse. When you look at the IBD 50 did touch some support here, top of value, but this is just a vicious move. And again, this is about 15%. That's a correction, right? You kind of usually define a correction 10%. Just like literally in a couple days, these things have had a correction, just really, really fast. So that's that. Another ETF that I've looked at a few times is ARK. Did manage to finish off the lows, but bearish 80% roll almost completed to the downside, very close. So momentum names still under pressure. Some of them found a bit of a footing today, but I think that we're going to have some big events this week, right? Meaning Nvidia reports this week. That's going to be very big for the AI trade. So I could show you what the history of Nvidia, as I don't know what Nvidia is going to do on earnings, of course. I could guess, we could look at the chart, but sometimes the chart, you know, when you have an event, it can negate either a bullish chart or a bearish chart. Here's what Nvidia has done, and I would put your eyes to this column because that's the most important column. It's what price does on earnings. Forget about whether or not they beat on the sales or whatever. The most important thing is how price reacts to it. You could see that it has had a pretty good earnings history, probably going back the last 10 quarters. It's gone up about 6 of those quarters. So it's got some good uh, previous performance. I don't like how this chart looks though. So I got out of my last piece of NVIDIA in the TTG trend portfolio. I also wanted to bring up a couple other charts too, but here's what this looks like on the weekly. So again, earnings can completely negate this, but I'm just saying right now, here's your rejection at the top of the value area. Maybe this can break back through on earnings, but ultimately, if there was no earnings event, I would not be looking at a long here because it looks like this is a toppy looking formation to me. Let's talk about a couple other things that I think are notable. All right. So one of the ratios that I've been providing on Twitter is the consumer staples to consumer discretionary ETF, and this is market cap weighted, but this has made a big move from the low. And consumer staples names, like this has become a defensive tape all of a sudden. Now, consumer staples, I'm not sure I want to go long here. I haven't really done anything in the space. I've just been watching, but this is 82.85 is something to watch. We could also look at the equally weighted to give you a sense of what's going on there. Right. And the reason why I'm doing this is looking at the equally weighted consumer staples versus consumer discretionaries, because the consumer discretionary ETF is very top weighted with Amazon and Tesla. So some people are like, I put this out on Twitter previously and like, oh, it's because of Tesla. Well, look at the equally weighted because then it's not biased. And that's kind of doing the same thing. This is the weekly chart, right? But you can see a pretty decent move here where consumer staples equally weighted is outperforming consumer discretionary. So what is this telling you? It's more of a risk off tape that we've got going on. If you slice it a different way and say, okay, let's look at the 4-week new highs versus new lows in the S&P. Now, the new lows did pick up today. Not a huge advancement in new lows, but this is the first day in a while. I think I have this chart up here for you, but maybe I don't. Or maybe I took it down, but this this is 1 day lag, by the way. So that's my disclaimer with this, but you could look to see what the pattern has been with new highs versus new lows on the bottom portion of this chart right down in here. And you could see that new lows have been expanding. They expanded on Friday. So again, they expanded a little bit more today. So we've got weakening going on under the hood. And if you look to see what sectors are moving up versus moving down, look at how many consumer staples versus discretionary, just another way of looking at it, right? Also look at utilities, healthcare, right? So this is different than what we've seen since the beginning of the year, where we've seen financials, tech, industrial lead the 4-week new highs. This is the first time in quite a bit where we're actually seeing the defensive sectors go ahead and dominate the 4-week new high list. Also, look at what's breaking. And by the way, how many tech names do you see in here? 2, right? And keep in mind, tech is 31% of the S&P. So you only have, and that's Apple, and which is kind of a more of a defensive tech name. So that's on the new high list, right? And look at what's expanding in new lows: financials, consumer discretionary, industrials, tech, right? So again, sometimes the pure numbers don't capture like what the themes are. And you've got really defensive names that are beginning to outperform because again, this is new. This is just a couple days. So you've got defensive names really beginning to outperform, and you're seeing more breakdowns than anything else in your higher beta, more growth stocks. So again, you could look at the charts and look at them in the indices. You could take a look at a couple of the proxies for big growth. We could do this. We could look at VUG too if you don't want to look at some of those actively managed ETFs too. But you could see this is growth was just breaking below the 50-day moving average. This is large cap growth. So we've got some issues in this market, and things are beginning to, 1 day or 2 days of a sell-off is to me is not that big of a deal, especially when I think a lot of stocks like overran themselves, right? Some people are calling these like blow-off tops. I don't know if I would call it. I don't know if I would call them blow-off tops. It depends on the name. Like, so look at AppLovin, for example. I would not call this necessarily a blow off top. I would say that the gap up was too much, and I think that this could be a buying opportunity into the 20-day moving average. And if you go through and you go through some names, you're going to find some names. They look, and my approach to today was I added to a couple trades, but I really didn't add any major new exposure today because I wanted to see how we were going to close today. And I think when you realize that when we're in a weaker seasonality period, as we are, as I just showed you in the beginning of this video, I'm in no rush. Would I like to finish out this month strong? I absolutely would. But I have to put one of the words that I kept saying in the weekend video for members is have perspective. Please have perspective, because this is just not a strong. There's not going to be. I'm sorry, I don't know that for fact. Everything in the market is about probabilities. So it's just to me a lesser probability that we're going to see like a lot of buyers come in because it's just weaker seasonality. So I hopefully we don't see too much more damage. And things kind of hang in here because I like some of these. And there's a lot of names. If you rewind to what I said about a week ago, in the weekend video, I thought it would be good if if growth stocks saw a pullback, but you don't want to see things completely break down. And that's kind of the crosshairs of where we are right now. Are we going to completely break down and is everything going to start to turn lower? Or are we going to stay in this range and this range will be bought again? Because right now, I think, coming into today, there really hasn't been any major change in terms of the range for most stocks, the range that they're in. And again, let's go back to the S&P chart just to reiterate this, but this is just a range. They'll break out, dips get bought, And, I would like to see price stay above the 50-day moving average because that would be uptrend. But even if we come down to the bottom of the value area, we're still going to be in the bottom edge of the range for the overall market. You won't have good leadership. You'll have things, again, you'll probably have more of consumer staples, healthcare utilities that are outperforming. And that's a changing of the guards. And that might be problematic. So, you know, we're just all I'm doing is taking the new information that we're given today and making an assessment of where we are. And ultimately, I think we're going to need more time. I think we're going to need to get out of February, which is a weak seasonal time, to see if really buyers come back in. But even if they do, I think you want to be cognizant of the top end of the range because that has been getting rejected, as we go along in 2025. So I'll leave it there. Like I said, I was going through. I'll give you another couple names that I'm watching, but here's Spotify. I mean, again, a very aggressive move, and so many of these names, I do think I'm not sure like if I want to use that term yet, blow off top. I do think they went too far on earnings. So in AppLovin, which had good earnings, I think coming right back down to where it was makes sense to me. I think that this was too much of a move. This was one that we talked about on pre-market prep. Look at, Bros, Dutch Bros, this is just, it's too big of a move from 63 to 85. That doesn't make a lot of sense to me. Now to see it retrace and maybe so it did bounce today, but it's still a big, these are still, this is still a big breakout. So I wouldn't like, I'm not getting super negative, but certainly I don't like what I see in terms of things really changing hands in terms of leadership and names continuing to go down. Like, we can go through a couple other groups and names, but here's one too. Like this has filled the earnings gap. Team would be one that I would be watching in the software space, right? Cyber names are something that I'm watching too, right? I tried trading this one last week, CrowdStrike. But I kind of got caught up in it and just pulled back too much. This is too much of a pullback, right? I don't like, I was watching the 20-day moving average and it held on the first day of the pullback, but it didn't on the second day and look at it come all the way back down to the 50. Now, again, this could be a nice place for it because the trend is still intact. And it did respect the 50-day moving average, but it also respected the 20-day moving average for one day. But I do like cyber, right? We'll see how this one goes. No position in this one in my trading account. I did add this to the TTG trend portfolio, but the software group. If we look at this, right, that's a nasty move to the downside, right? Semis, right? Just to kind of go through a couple more of these sectors. Now, I didn't think that the semis were going to get out of the value area here. I thought that they were going to get rejected here, but I mean, talk about range bound. This is right back in the middle of the range. Right. So I'll leave it there, guys, for now. Reminder, one day is not a trend. Weaker seasonality will continue through the end of the week because we've got one more week of February or 4 more days of February. So my viewpoint is, again, I'm not giving out any advice or anything like that, but I'm trying to be as patient as possible with this price action and also put things in perspective about so many names which have run up and they were due for a pullback. All right, guys, I'll leave it there. Have a great night. See you tomorrow.